Let's get in a quick corporate conversation. Wockhardt is in focus as the US Body Clinical and Lab Standard Institute for CLSI gives WCK 5222 high susceptibility breakpoints after the successful use to treat a cancer patient in the US. Ekta caught up with Habil Khorakiwala, the chairman of the company, to know more about the potential of this particular drug. Listen in.
Zenic, which is 5222, it's a brand name. I believe it has, most importantly, it saves life. There is no antibiotic here today or likely to be there which will deal with resistance organism. And in India, the incidence of antibiotic resistance organism, which is very conservatively done, is about 750,000 patients. And this drug is it is being priced comparative drug in US market for a treatment about $15,000. And we intend to market this product in India at a heavy discount of 85 to 90%. And with that, our approach in Indian context is how do we make this drug accessible to larger number of patients in terms of affordability, in terms of its usage. So that is how we would be roughly pricing the product. And we believe there would be extensive market.
Can you tell us about, for example, when do you expect an India commercialization of the drug, and when do you expect a global commercialization of WCK 5222?
We expect India commercialization sometime early calendar year 25. That is FY26. More or less, we will have a full year commercialization. The emerging market commercialization would be another 12 to 18 months later on. And the Western commercialization, we expect sometime on later part of 26.
Out-licensing opportunities for this drug?
Yeah, we have thought through this, and what we thought that we should monetize the outsourced licensing for the Western market, where 90% of monetization value is available. So that is what we would do. We'll go to a global pharma companies and monetize it once phase 3 clinical trial is done. Whereas in India and emerging market, we intend to market ourselves for two reasons. One, that we have a whole portfolio of new drugs available. Second, our objective is to make drug accessible and affordable. And that is a kind of, you can say, social call along with what we have done. And I thought unless you can make drug accessible and save lives, that is a very important part of it.
You raised funds via QIP as well recently. What is it going to be utilized for? How much is going to go back into your R&D program? How much of it is going to be utilized for reduction of debt?
Let's put it differently. About 40 to 50% we will utilize this for the research program. Partly we will need for our operating working capital. And whatever debt is due as and when, we will pay on time.
When it comes to the US business, you're now only looking at contract manufacturing, or are you going to look at probably any kind of long-term remediation or, manufacturing and resupplying to the US?
See, US market, we have de-emphasized as a part of our long-term strategy. Mainly because we don't have a critical mass. We are doing out-licensing. That we will continue what we are doing. We are not going to invest significantly in research as far as US market is concerned. Our focus would, in addition to new drugs portfolio, would be in biologicals or insulins, new insulins, other diabetic product. That we would be focusing on it, and we would be available in all biosimilar space in next 3 to 4 years with whatever is getting off the patent in India and emerging market.
GLP-1?
GLP-1 is one of those areas, but we are also certainly looking at it. Technology is in a similar space.
Okay, well, that's an interesting chat. We'll take a quick commercial break.